Thinking of selling your home but worried about capital gains? If you're in this boat, then it's essential to understand how capital gains taxes come into play. Hey everyone, this is Trevor Burris with the Trev and Jess team of Love It Properties, and in this video today, we're going to discuss everything you need to know about capital gains taxes when selling a home. Let's start with the basics. Capital gain taxes are taxes you may need to pay on the profit you make from selling an asset, in this case your home. This profit is calculated on the difference between the sales price and the original purchase price of the home. And this is called your cost basis. The good news is that in the US, there is a primary residence exemption, allowing homeowners to exclude a certain amount of capital gains from taxation. So if you're single, you can exclude up to $250,000 of capital gains from the sale of your primary residence. If you're married and filing jointly, the exclusion doubles up to $500,000. To qualify for the primary residence exemption, you typically need to meet certain criteria. This often includes owning and living in the home for a certain minimum period, typically 2 out of the last 5 years of ownership. Keep in mind that some restrictions may apply, so it's super important to consult your local tax laws and also to talk to a tax professional. If your capital gains exceed the exemption amount, or if you haven't been living in the home for 2 out of the last 5 years, you'll probably need to plan to pay some capital gains taxes. Calculating your potential taxes involves taking your original purchase price, subtracting it from your sales price, and then multiplying this by your tax rate. This rate varies both by the individual tax rate that you have and by the length of time that you've lived there. Depending on the duration of the time that you've lived there, capital gains may be calculated as short-term gains or long-term gains. Short-term gains are typically taxed at your standard tax rate, while long-term gains often benefit from lower tax rates. Selling a home involves a lot of paperwork. You'll need to report the sale on your tax return, providing details about the transaction, such as the sales price, purchase price, and relevant dates. Make sure to keep accurate records to substantiate your calculations. Before you sell, consider consulting a tax professional to better understand your situation. They can help you navigate any unique circumstances and suggest strategies to help minimize your liability. There are many ways to defer these capital gains, be exempt, and to lower the cost basis in particular situations. But talking to an accountant before you list will help you be best prepared for your particular situation. And that's it for today's video on capital gains taxes when selling your home. If you found this information helpful, be sure to like, share, and subscribe to my channel for more valuable content. If you have any questions or topics you'd like to see me cover, please leave those in the comments below. Thanks for watching, and we'll see you in the next video.